Hi there, welcome to Markets Tomorrow right here on ED9 and Mumbai News Centre. I'm Tanveer. We're going to be really tracking the sense on the markets right now, given that it was a bit of a step back really for the indices in the session today. So about 0.5% down for the benchmark, and likewise for the broader market, some bit of profit taking coming in to the session. We will talk about the markets in just a bit, highlight the sense that investors are gathering at this point with Tushar Pradhan, CIO, HSBC Global Asset Management. Ajay Bagga will join us for a fundamental view in the markets. Sachhidanand Uttekar will take us through his technical ideas to approach trade tomorrow. To the top stories then. It was a weak close for the index at around 8,500. Profit taking was seen. Kotak Mahindra Bank cracked in the session as gross NPAs rose about 8% quarter on quarter in Q1. And the market didn't take kindly to that number. HDFC Bank met street expectations with their quarterly performance, and that was encouraging, even though the stock was a bit sluggish. But both these stocks had seen a decent run ahead of numbers, so there was a bit of sell-on news sort of a trade that was playing out. Ambuja Cement gained in the session today on the CCA nod for stake buy in Wholesome India, so that kept the entire cement sector in focus. ACC, Ambuja, Ultratech Cement were all active. New kid on the block, L&T Infotech, had a sluggish debut, pretty much expected from all classes of investors, so not much of a disappointment there. The mood on IT has been a bit off in recent times. And then, of course, India Infoline Holdings was one of the top gainers as the UK firm has invested in their financing arm. So that gave the stock a shot in the arm, was up in excess of 10%. The question that we are asking is, will the market sell-off will the market sell-off essentially continue or be the case due to short-term profit taking amidst earnings? And Ajay as well as Sachhidanand, great to have you on the show. Good evening. What's your own sense on where the markets go from here? Ajay, I'll start off with you.
Yeah, evening Tanveer. I think markets are a bit tired. They're a little overextended. They've run up ahead of themselves. So a little bit of a short-term correction might be coming. Overall, markets have really run on twin cylinders of hope engendered by global central bank convergent action, as well as hope engendered by passage of GST and other reforms in India and a good monsoon. So more or less both those hopes are getting discounted in fully. And now it's coming back to fundamentals and earnings, which are very tepid. There is no global growth per se, and there are looming risks like Brexit, what happens with it. So I think overall you will see global markets also stalling in the near term. I don't know for how long that will last, but definitely markets have run up very sharply. And it will be a good time to digest that growth, digest that run-up, and then create a base to move forward again.
Sure. Okay. That's a quick view coming in on the markets in general. What about earnings in specific? Were you provoked to think about the earnings of private sector, large cap private sector banks, such as HDFC Bank and Kotak Bank, when they reported slightly higher gross NPAs this quarter around? There was some bit of asset quality pressure. Would you extend the thought to something that's concerning right now? Or would you just say, look, yes, there are some bad accounts. So just like the PSU banks, which have a slightly bigger problem in hand, you will see some of the private banks also face some troubled accounts and delays in payments. So it's part of the business.
I think there is going to be a big differentiation, Tanveer. There are the private sector banks with a problem, and there are the others who have good consumer franchises and who don't have too many problems. I think the banks reporting today have a relatively cleaner balance sheet. It was a market overreaction, and it was also, as you said earlier, sell-on news that there was such strong run-up. HDFC, for example, in July itself, has already run up about 7%. So it was more a reaction to finally the earnings coming out that you saw a bit of a weakness, and you can hardly call it weakness. At least in the case of HDFC Bank, it really ended up less than 0.5% down. So I would say the bigger problem lies ahead with public sector banks. Again, the markets are over optimistic, over sanguine. They are, 20,000, 22,000 crores of capitalization, absolute number is good. But look at the Fitch report, which is talking about $90 billion. The reality is somewhere in the middle, but I think you need about 4 lakh crores at least of capital from here to in the next 3.5 years to meet the Basel III compliances and to keep on growing in conjunction with the economy. So I think the bigger issue will be public sector banks. Luckily, most of them are not declaring results before the expiry of the July series. You will see the trouble happening in August, and hopefully if GST goes through first week, second week of August, then that will cover for that. But that fundamental issue remains in the country of NPAs, of credit not taking off, of businesses not investing. I think that stays with us. What is covering that is that just like the US, we are a consumption economy. 70% of GDP is by the private consumer, who's quite strong and who are getting a fillip by the pay commission as well as a good monsoon, which will translate into better earnings. Our own estimate is that the GDP for agriculture will grow anything from 3.5% to 4% this year on the base of this good monsoon, and that will give a huge fillip, but 6 months down the line.
Okay, fair point. We are looking at ITC's earnings. We'll be watching out for the FMCG business, particularly what happens on cigarette volumes. Ajay, HUL, which is the benchmark, it's seen as an industry benchmark, and I don't think their volume growth was off the mark completely, but was at the lower end of the range. As long as it is in the range, I think the market would be comfortable with that idea. Do you see for the FMCG pack a turnaround, a pickup led by stronger demand coming into the rural side of the economy through the course of the second quarter, that is the quarter that we are in, July to September?
Yeah, definitely. And in fact, I was reading the earnings transcript of the Unilever Global CEO Polman yesterday. And what he was really saying, the US has less than 1% growth year on year in FMCG. Europe had 0.1%, while the emerging markets had 8%. And he was really pointing to Asia as a very golden area of growth. And within that, definitely India, China stand out. So I would really look, far away from this market noise on levers and all that's happening. I would say consumption stories are very strong. FMCG companies are really in a sweet spot. They don't need more capital. They give fabulous returns on equity. Their valuations are very high. Traditionally, their price earnings are 40 times plus. And you pay more because of the stability of earnings and the growth that they bring in. So I would still be a buyer in FMCG and continue to invest in the good FMCG, both MNC as well as the Indian companies. The India growth story, the India consumption story is going to get stronger in the second half, and you will see that coming through. Margins probably have peaked because commodity cycle seems to be turning again, and prices seem to be stabilizing. So it will be difficult to increase margins from here on, but you will see volume expansion on the basis of rural growth coming in, rural consumption picking up, as well as the urban kicker that will come with the enhanced pay packages for nearly 1 crore citizens, and then the follow-up from the state governments as well as the public sector units.
Okay, fair enough. Sachhidanand Uttekar also joins in with his views on the technicals. Sachhidanand, it was a good move on Ashok Leyland in the session today. Sustainable, you think? Because I think over a 6-month period, 110 to 115, I think that was acting as the top for the stock, which has had an unprecedented rally from, stretch, actually starting all the way from 15 odd levels. So do you see that attempt again coming in for the counter?
Good evening. Yeah, Well, absolutely, yes. If you look at the overall trend, it has still been in a secular uptrend. We saw a good consolidation to a correction in last couple of months. But if you look at the monthly setup, we are looking at a rising three kind of a pattern, and a rebound from a support like this augurs well for this particular move. So we expect some continuation of this move. We expect the stock to again scale higher to the levels of around 110 or so, and it's a decent support at around 90 levels, and a very good reward to risk for creating fresh long positions.
Okay, and also a quick perspective in cement. Ambuja Cement, ACC, Ultratech, they've been in a strong zone.
Well, cement is one particular sector which has been very consistent in the past. We have again seen a good strong momentum building here. We have no traces of any exhaustion in any of these cement packs, right from the leaders to the small caps and mid caps cement counters. They are getting a lot of traction. So we expect this particular momentum to continue. Our top pick from the pack would be something like an Ultratech, where we see a further up move right up to 3800, 3840.
Okay, gentlemen, we'll take a short break right now, but when we come back, it'll be full focus on tomorrow's session and how viewers can benefit from trade, given all the news flow that'll hit the screen tomorrow. As we take that break, hear out an important voice in Tushar Pradhan from HSBC Global Asset Management on his investment outlook.
Once we start seeing some buoyancy back in earnings growth numbers, it's when the stock prices will start, kind of discounting that strength. But the main issue is what is leading to the soft kind of numbers that we are seeing for now. I would hazard a guess that I think globally the incremental spend which came in last year on IT is kind of tapering off. If you look at what's happening in all of the economies, if you take the Brexit for example, this is always going to lead to some sort of softness, especially in Europe and in Japan. The global economy is really struggling for growth. There doesn't seem to be much areas where you could see that incremental or I would say discretionary budgets for IT are going to grow very dramatically this year. I, however, don't think this is a disaster or anything like that. It's just maybe a quarterly aberration that we will have to work through.
Let's talk about earnings tomorrow, and most prominent among which will essentially be Axis Bank reporting their numbers. Net interest income is expected to come in high by about 13%, and profits are likely to edge up just that little bit. Poonam joins in with a quick perspective on what to expect.
Well, Axis Bank is likely to report a poor set of numbers, especially in terms of the profits as well as in terms of the asset quality. We're estimating the profits at 1990 crore, which is nearly a flat growth coming in on the profit front. The net interest income would still be healthy, growing nearly at 13% odd, but we should be seeing dip in terms of the margins on account of the possible interest reversals that are possible during this quarter. So we should be seeing possibly a margin dip of anywhere between 8 to 10 bips on a sequential basis. Most of the analysts are also working with or factoring in a higher provision cost as well as higher gross NPA numbers. Do remember that the management did mention in the last quarter that the watch list of 22,600 odd crore has already been declared by them in the last quarter. They did mention that most of the slippages we probably may see in the first half of FY17. So watch out for the asset quality here. Management also stated that they do expect nearly 60% of the watch list to in fact slip into NPAs over the next 8 quarters. So watch out for any change in the guidance on this matter. Besides that, of course, watch out for how the entire loan growth is going to be shaping up, because the loan growth is still likely to be pretty much strong, around 20 to 21%, led by retail loan book growth. Overall, of course, watch out for management commentary in terms of their guidance on credit cost, asset quality, margins, and also how would they be looking at growth going into entire FY17? So overall, a slightly weak quarter for the bank.
Poonam, thanks very much for giving us that quick update. Also, the market will be watching out for M&M Finance's earnings. Will we see a strong performance at the start of the year for the business? Tanya, is that the sense that you're getting?
That's right, Tanveer. Actually, we're looking at a good quarter only because of the low base effect that we saw last time around for Mahindra Finance. Hence, the NII is seen at about 818 crores, up about 14.2% year on year. The operating profit is seen at about 512 crores, while the PAT is seen at about 136 crores, up almost 52.8%. Now remember, again, this is because of a very low base effect that we saw in Q1 FY16. The profit growth will also be high due to higher provisions that impacted profit last time around in Q1 FY16. Now the NIMs are also expected to be slightly muted in as compared to Q1Q, mainly because the benefits of the lower borrowing costs that the company will get offset by lower recoveries. These lower recoveries are currently seasonal in nature. Q1 is usually a seasonally weak quarter for all NBFCs in terms of asset quality. Hence, even the NPA stress we're seeing to be slightly high because of the seasonal nature. Now, provisions are also expected to rise quarter on quarter, while the AUM growth is likely to moderate at about 8 to 11% year on year. Remember, the AUM for Q4 FY16 stood at about 40,933 crores, up almost 11% year on year. Now, finally, disbursements are also expected to grow at about 13 to 14% year on year, mainly again because of the low base effect that we saw in Q1 FY16. Now, the factors to watch this time around for Mahindra Finance will be the trends in the NIMs, the asset quality and the recoveries, as well as the management's outlook on the good monsoon demand that has come in, as well as tractor sales because of this good monsoon. And finally, watch out for management outlook on rural demand, and finally its housing subsidiary performance.
Thanks very much for that, Tanya. In fact, while we've addressed the concerns with private sector banks, if there are any, on the NPAs rising and there being stress on asset quality, what about NBFCs, non-banking financial institutions? What's your overall outlook there, Ajay? And M&M Financial actually seems like it's getting its act together, which we saw in the earnings gone by. They are looking at a stronger earning this quarter. Of course, there's a base effect that will kick in. But for a lot of rural-oriented businesses, is this a good time?
Yeah, definitely. And again, the market has run up very fast in the last couple of months. So there's very little that is really left which is cheap today, Tanveer. So you're really struggling to find value. And most of the gains have already been baked in by the market. That's what I feel. Especially on the NBFCs, extremely overvalued sector now. Still there is growth. We are willing to pay for that growth for the better run companies. So I think rural and NBFC both, you are really struggling to find value, as is the case again with the consumer durables segment. Again, one beneficiary from the pay commission and good monsoons. But the stocks have run up so much that today it's difficult to really allocate fresh money. I think that way, if there is a sideways market for some time, that will help it digest this growth time-wise. Otherwise, you have to look at a sharp correction to really justify the kind of valuations. You look at some of the microfinance players running at 8 times price to book. You look at NBFCs which have nearly doubled over the last 1 year. I think that is very inordinate, and it is in the overvaluation zone now.
Okay, fair point. On the charts within private banks, Sachhidanand, which ones do you like? What's your pecking order? HDFC Bank, Kotak Bank, Axis Bank. What's your top strategy among private banks?
Well, if you look at the private banking space in the last couple of days, there has been a distortion. If you look at something like an IndusInd Bank, it has still been consolidating well, and it augurs well for a breakout. So positive, from a positive perspective, I would bet more on IndusInd Bank. Even Axis Bank, it has declined substantially, and we have the results panning out tomorrow. If you look at the overall trend, it has been trending well. The bullishness in the stock is still intact, and this particular correction provides another good opportunity to create fresh long positions. So my picks would be IndusInd Bank and Axis Bank on the long side.
Okay, let's very quickly, Sachhidanand, get your strategies as well for viewers to approach trade tomorrow.
Well, we have two buy calls. One is on Asian Paints. If you look at the overall structure, the stock has been in a very secular uptrend. We have seen a breakout from a flag formation on the weekly scale, which augurs well for the move right up to 1090 levels, and a stop loss can be placed at around 1030, and fresh longs can be initiated. The second call is a buy call on Hero MotoCorp. We have seen a good rounding formation on the intermediate scale. This particular pattern will be activated once the stock starts trading above 3290. We expect the move to stretch right up to 3480, and stop loss can be placed around 3200 for fresh long positions. On the sell side, we have Bharti Infratel. If you look at the overall trend, the stock has been on a declining trajectory. We saw a good pullback, and a spinning top kind of a formation again augurs well for the weakness to continue. So a sell call can be generated here with a stop loss at 358 and an immediate target of around 342.
All right, Sachhidanand as well as Ajay, thanks very much for taking out the time to speak with us. Appreciate your views as always and your insights to the markets. We'll take a short break on that note. When we come back, more news and updates on the channel.